Discovered a prior payroll tax error but still need to pay employees on time? If you're stuck between fixing the past and paying the present, you're not alone. Today, we're handling current payroll while correcting past tax errors in ADP. Welcome back to Guide with Samuel. Let's break it down. You need to run two separate processes, one for the current, correct payroll, and another to adjust the prior period's taxes. Process 1. Run the current payroll normally. Process the current pay period for your employees as you usually would, with all the correct hours and rates. This ensures your employees are paid correctly and on time. Process 2. Create a separate tax adjustment. Do not try to fix the old tax error within the new payroll. Instead, use ADP's Tax Adjustment or Payroll Adjustment feature to create a separate, correcting entry specifically for the prior period's taxes. This keeps the current payroll clean. And that leads to my crucial pro tip: the adjustment will affect your next tax payment. A tax adjustment for a prior period will change the amount of your next scheduled tax payment with ADP. It may be higher or lower to account for the correction. Be prepared for this change in cash flow. So, just like that, you can keep payroll running smoothly while cleaning up past mistakes. Separating the processes goes a long way in maintaining accuracy in both current and historical data. Now I'm curious, have you ever had to make a significant prior period tax adjustment? What was the cause? Let me know your thoughts down in the comments, and subscribe for more clear-cut guides like this one. Thanks for watching. I'm Samuel, and I'll see you in the next video.